this one? Make it through okay? Okay, let's go through them. Hearing no resounding yes, we did really well, or no, we didn't do really well.
Can you make those bigger?
We're going to go, yeah, I can. We'll just go through them all. There's only 6, so it shouldn't be too bad. Is that better? Can you see that? Okay. So the first, it says prepare their journal entries in the non-fund, indicate whether any gains or losses are to be reported in the government-wide financial statements, right? Because gains and losses don't get reported in the non-fund. They get reported on the government-wide financial statements, which next week we'll get to more in depth. The government-wide financials and how you create those. So number 1, land was donated for use as the site of a bike and nature trail. The donor had acquired the land for $3,000 about 20 years earlier. Its estimated fair value when donated to the county was $40,000. So the entry is pretty straightforward. Yes? Questions? If you have them, now is the time to ask. Okay? They donated an asset, they added to their net position. Number 2 says computer equipment was ordered for general fund departments. The estimated cost was $48,000. We don't make an entry because there's no budget entries. You made budget entries in the funds, right? In the general funds, but you don't make budget entries in non-fund accounting. You also don't make it in the proprietary and in-service funds. You don't need budget entries. Now, are budgets still important? Did any of you read that small paragraph section that they have about budgets? In chapter 10, I think it was. Budgets are still important, right? And these folks still make budgets. But a budget is just what?
Estimate them out.
It's a plan, right? It's a plan of how much you think you're going to spend. So, do nonprofits have budgets? Of course they do. Right? The government budgets, the ones for the funds, those are passed by law. So those are much more important, right? Have much more bearing than proprietary funds. The other reason is, if you think about it, the reason the budget's so important is because those are non-exchange transactions. Remember we've talked about that? So, those of you paying taxes, and I'm assuming most of you have probably never looked at your county or state or national government's budget. But if you had, you could see where your money's going. Because you're not getting something in direct exchange for it. Whereas with a proprietary fund or an in-service fund, you are. Does that make sense? So there's still a need for a plan, but there's not as much need for an official budget to go before everyone. Okay? So the main thing is, you don't need budgets. So there's not going to be a budget entry here. Okay? So for these non-funds, there's not going to be a budget entry. Okay? Number 3. The computer equipment was received by the county. The actual cost was $47,750. The county had paid $42,000 to the vendor by year end. Again, probably pretty straightforward. Yes, sir.
So, we don't account for at year end what we haven't paid yet? We don't make like an accounts payable or something like that?
For
the $5,750 that we haven't paid yet?
For number 3?
Yeah.
No.
Why not?
Why? Anybody?
Well, I mean, to year end, you should show somehow that you still owe $5,000
Sure.
on it.
Is it because it's already accounted for?
Where?
Capital projects one?
Oh, is it because you originally accounted $48,000 for it? Or?
No, it's because you put it in the fund, not in the general fund necessarily, but in one of the funds, not in the non-fund. Does that make sense?
Yeah.
Because it's not a long-term liability, right? It's a short-term liability. So yes, it would be recorded at the end of the year, but it would be it would be recorded in one of the funds, not in the non-fund. Okay?
Because I just put I broke it down.
Yeah, so these are only entries in the non-fund, in the capital asset and general liability, or long-term liability. Okay? Just like in the other, when we were doing the other funds, right, we did the capital projects and debt service and general fund. We didn't record the assets there, right? We record we record the assets that we're buying using money from the general fund in the non-fund. In the same way, you don't record those expenses or those accruals in the non-fund. You record them in the general fund. Does that make sense? Okay? So it's only asking you for the entry for the non-fund, for the GCA, GLPL. Okay? Number 4, the county sold a dump truck that had cost of $55,000. Accumulated depreciation on the truck was $50,000. The county sold the truck at auction for $3,300.
Do we have to put that loss piece down there?
Yes, because the problem asked you
for the 3,300. So you have to take the 3,300 minus the 5,000, right?
Yes, correct.
Okay.
Because the problem says indicate whether any gains or losses are to be reported in the government-wide financial statement.
Okay.
Does that make sense? Because you're not, again, recording the loss here, but you are recording it elsewhere in another fund. And so this problem was asking you, okay, so this is what's going to happen in the capital asset and long-term liability piece, right, the non-fund. This is going to happen elsewhere, but we want to know what this loss will be.
Okay, so we can just write it underneath there? Like, okay.
You don't need to do an entry for it. You just need to know this is what the loss is going to be. Okay? In this case, loss. Same thing for number 5. Storage building used by general government departments was destroyed by a tornado. The building, which cost $150,000, is expected to be rebuilt at a cost of $200,000. The building was 50% depreciated when destroyed. Construction has not begun on the new building. So, when you record the loss, right, or you zero out the asset, you're going to get rid of the accumulated depreciation that you've accumulated to this point. You're going to decrease your net position. You're going to decrease your asset. Then you're going to make a note that a loss of $75,000 will be reported on the government-wide financial statements. Okay? So, to kind of give a bigger picture, we started out in the first 4 chapters looking at everything, right? All the funds and the non-funds. Then, since then, we've looked at the funds, the general fund, the capital projects fund, the debt service fund, right? Things like that. Next week, we're going to start bringing it all back together. And you're going to look at the government-wide financial statements and how you create those. Okay? How do you bring everything together? So when you look at chapters, 12, 13, 14, right, you're going to see statements that have all the funds listed on them, and then a total for the whole government. Does that make sense?
So if we were working with this, say in the bigger picture,
yeah,
how would that $200,000 rebuild estimate be dealt with?
The $100,000 rebuild estimate.
It was $200,000.
The $200,000, the expected rebuild at a cost of $200,000. What do you guys think? How would you put yourself in the seat of the government? Right, you're the controller or comptroller, whatever your title is, and you get an estimate on this building for $200,000. It would have to go through the whole government process, right, of getting okayed and getting allocated, and then you would build what kind of fund? Capital projects fund, right, where that $200,000 would be budgeted. If it were approved by the voters, right, and that budget were accepted. Does that make sense? That's a good question. And then, if you were going to fund that $200,000 through debt service, you would create a debt service fund, right? If it was through a special assessment, you might create a special revenue fund, right? Does that make sense, how those go together? So it just depends on how you went about doing it.
So if you had this information, but none of that had been done yet, like you don't know what fund, you don't know how you're getting the money,
right,
would you even report it on, say, a financial statement? Do you have an estimate, or it would just be be information?
Yes, it's just
Got it.
information.
Okay.
Yeah. So part of, and you guys, I think, highlighted that in your presentation, there's information that's given to you that you don't need, right? And you've probably seen that in other places in the book, in other books, right? There's information you don't need. So you have to decide, where does that fit? Okay?
That's the one I didn't get.
All right. Number 6, the last one. The government leased a building under a capital lease agreement. The capitalizable cost was $1.2 million. The county made an initial down payment of $100,000. You're going to record the lease,
For number 4.
and the lease liability, and the net position, the change in net position.
For the 1700.
Questions on
I
that one?
didn't have that on mine.
Questions? So you have the entries that are just for the non-fund